Okay, so when we talk of support and resistance, we are talking of key areas where price rejects or reacts. Okay, support and resistance, we are talking of key areas. These are where price reacts. All right, these are key areas where price reacts. Okay, so the driving force of the market is fundamentals. All right, the driving force of the market is fundamentals, and by fundamentals, what I mean is news, political events, and so on. I mentioned this in our last class. All right, so the driving force of the market is always fundamentals. Is what makes is what moves your candlesticks, is what is shape in making those things to form those movements, those candles to form those movements. All right, is the fundamentals. So the areas, the levels, the levels where the candlesticks react or change direction is called a support or resistance level. All right. So the levels where candlesticks react or change direction. Okay, so we are called support slash resistance levels, which I'm going to be using as and R, SNR. All right. So this is what I mean. Let me show you guys. Okay, so when I say the driving force of the market is news, what I mean is this. Look at this now. Look at this now. Price moved from here all the way to this point, right? Yes, but it didn't just start moving by itself. News, that is fundamentals, they played serious roles. All right, they affected this movement a lot. So fundamentals pushed this price from this point all the way up to this point, and price did not just move once. It was moving up, down, up, down, up, down, up, down, forming what we call highs and lows. Forming highs and lows. All right. Then if from there you start hearing terms like higher high, lower low, lower high, lower low. All right. So price moved in that form until it got to this point. Okay. Now, um, you see that whenever price change direction or react, like here now, price was reacting here. Look at price reacted one, two, three, four, five, six. This place that price reacted now, we call it a support or resistance level. All right, SNR. That's what we call it. So you can go there and put a line there to know that okay, this is what a support or resistance line. Okay, so all these areas of reaction, like here, you can call it a support or resistance area. Same thing with here, here, and the rest. Okay, so I'll still go deeper into all this, but now let's go to the very, 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 very beginnings of support and resistance. Let me go back to my notes. So when we talk of support and resistance, There are three types of support. Types of support. Okay, let me use S and R. S and R. All right. There are three types. The first one is what? Horizontal. Horizontal S and R. Second is diagonal S and R. And the third is what? Dynamic S and R. All right. So we have the horizontal, we have the diagonal, we have the dynamic. So quickly, let me just show you guys what I mean by horizontal, diagonal, and dynamic. Let me share this. So when I say horizontal SNR, this is what I mean. Let me go to my daily charts first. By horizontal, I mean these horizontal lines here, like these ones, these two. These are what we call horizontal S and R. By diagonal, I mean your trend lines. Look at this. Look at this. All right, this is what we call diagonal S and R. Horizontal what? S and R. Diagonal S and R. Then by dynamic, by then by dynamic S and R, I mean your moving average. Okay. Let me search for moving average. Let me change the value. 50. All right. Yeah. So this is my moving average. My moving average is also what? My dynamic what? S and R. Why did I call it dynamic S and R? See it here, this stuff moving here. Why is it called dynamic S and R? It's called dynamic S and R because something that is dynamic means that thing moves. Alright? Static means it stay in one place, but dynamic means it moves. Alright? Hold on. Let me add it. So I'm going to use the 50 EMA. Yeah, 50 EMA. I love using 50 EMA. Okay. So by horizontal, I mean this horizontal line. By diagonal, I mean your trend line. See it here, is moving a diagonal line. Then by dynamic, I mean your what? Moving average. Okay. So let me share this one right here. Okay. So for horizontal, okay. Horizontal S and R is your horizontal lines that do what? To depict levels where price reacts. Okay, that's the horizontal S and R to depict what levels where price reacts. Your diagonal, these are diagonal lines. You can also call them what? Trend lines to depict levels where price reacts. Alright. Then your okay, hold on. Then your dynamic is uh oh like call them now. Okay, let me just give drop the examples. That is your moving average, Bollinger Bands, Ichimoku, so on and so forth. Yeah. So that okay with etc. Okay, so why we use support and resistance is because this show us key areas or key levels where price react, and from there we can pick our entries or our exit. Okay, from our support and resistance we can pick our entries and our exit. Yeah. So let me now move over to the practical aspect. This is all about the theory. Everything here is theory. Everything is what theory of it. Support and resistance is not supposed to be that difficult or that hard. Something that you can just draw on any time frame. Okay? Yeah. So let me share my other screen. So guys, what I have here is GBP NZD. This is what the GBP NZD. Okay? Yeah, this is GBP NZD. So uh, we are going to I'm going to show you guys what I mean, how to use the support and resistance well. Okay? Yeah. Mm, okay. I want to use okay, let me use another chart. GBP NZD. Let me use another broker, forex.com. Okay, cool. Yeah. So this is what I mean. This is let's start from the very basics now. So when we talk of horizontal support and resistance, see what I mean now. To perfectly draw your horizontal, you go to any time frame of your choice. Okay, so you look for where price has repeatedly reacted. All right, like you can see here now, price reacted one, two. Let me annotate it. Price reacted one, two, three, four, five, and so on and so forth. Okay, so price reacted at those levels. So what am I going to do? I will just go and place my what line there, my horizontal line there. I'll go and place it right there. Just drop. Okay, let me do the thickness so you guys will see it clearly. Alright, so I'll just go and place my line there. So now, what is it telling me? It's telling me that okay, price went up here, it reacted here, fell, went up again, fell, went up and did what? Fell, went up again, fell. Then what happened? It broke it, came back down, went up, then came down. Then what happened at the near again? At the near here, what happened? It did what? Fell. Okay? Yeah. So this level now, anytime price is reaching this level, it's telling me that okay, price might either fall from here or do what? Break it. Okay? So if someone tells me I should buy or sell around here, I'll tell the person no. I'll have to wait for price to either reject, then I'll sell, or break retest, then I'll do what? Enter. I will enter buy. All right. So then for the diagonal, which is trend lines, you just go see your trend line here. You pick it. You look at areas where price has reacted two at least two times. All right, at least two times. See the first, see reaction one, see two, see three. All right, so you just go there, pick one, Now you can see it. See how sweet it is now. Let me be a thickness. All right, you can see how sweet it is. One, two, three, four, five. Five touches, and whenever price touched there, what happened? It bounced up, abi? Price touched it, what happened? Bounced off. Price came here again, what happened? Bounced off. Price came here, what happened? Bounced off. Now price has come here again. What am I going to expect? A bounce up, definitely. So I'm expecting a bounce up from here, right? From here to somewhere, maybe here or any other place. All right, that's what I'm definitely expecting. So this support and resistance they show us key areas where price might is likely to reverse or react. I use the word reaction because all these things like this. Let me show you something like this now. This right here. This is called reaction. Price was not moving up down in the same at the same what level. This is what reaction. No definite movement. All right, this is reaction. No definite movement. We're just reacting, moving up, down, the same level, the same zone. All right, this is what reaction. Okay, yeah. So then for our dynamic support and resistance, we use. I'm going to be using what we call moving average. Okay, so the moving average acts the same way as your normal horizontal or diagonal lines. Whenever price gets your moving average, what happens? It either reacts, breaks it like that, like that. Okay, let me change it to uh, 200. Yeah. So you can see when price got to this point, what happened? It reacted, but what it broke down. So when price got here, it did what? Reacted and did what? Fell. Price got up, reacted and did what? Fell. All right. So just it can also break just the way price can break your normal horizontal, price can break your what dynamic. Also, price can break your diagonal support and resistance. All right, yeah. So that's that about that. That is support and resistance. So now, how do we use support and resistance to trade? Now, let me now go back to my. Uh, Let me go back to my notepad. How to trade using SNR. How to trade using what? Support and resistance. How to trade using your SNR. Alright? So the first rule of trading is follow the trend. Follow what? The trend. Alright? A saying that goes uh, the trend is your friend until the end. Alright? The trend is your friend until the end. Okay? You guys I'm writing all this down because it's really going to help you. Okay, so when you have to the first rule of forex is you follow the trend. Why do you follow the trend? You follow the trend because you are retail traders. You are not big traders. You are not the big boys in the market. You are using small money in the market. All right. There are people that use billions of dollars that they trade with billions of dollars every day in the market. All right. So uh, this saying the trend is your friend until the end. You have to follow the trend so that you won't start going against the trend. How do I mean by that? Well, how will I put this stuff now? If okay, let me share my screen back again. Okay, now imagine someone now. Um, this is a what? Bearish market, right? This is a bearish market. This right here. Let me show you. This now is a bearish market. This stuff here. So this is a bearish market. All right. So in the bearish market, what do? You look for what? Sell opportunities. Okay. You look for sell opportunities in a bearish market. Don't look for any buy opportunity you are seeing is a what? Retracement. Any buy opportunity you are seeing in a bearish market is a what? Retracement. Unless it now fully reverses and does what? Forms a bullish trend. All right. So here's what I mean now. If you are following the trend, you follow this trend from this top, you just be selling, sell, 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 sell. Don't look for buys unless you see buy confirmations to show you maybe candlesticks and some other things that will show you, oh yeah, it is time to do what? Buy. All right. Like here now, the trend ended. There's something called this thing was forming. This was a high. This was a high. It was a low, lower high, lower low, lower high, lower low. Okay, this was a high, lower low, lower high, lower low, lower high, lower low, like that. But here, what happened? Here it did what? Form instead of forming a lower low, it formed an equal low, then higher low. Alright, this already signifies a trend reversal. Okay, this already signifies what a trend reversal, and as you can see, this currently now is a bullish market. All right, see right is a bullish market. Let me draw from here to this point up to here. See, it's a bullish market, so you are looking for what? Buy opportunities. Buy what? Opportunities. In a bullish market, you look for buy opportunities. In a bearish market, you look for what? Sell opportunities. This is the best way to play safe in the game of forex. All right, this is the best way to play safe. You follow the trend. If the trend is a bullish trend, you look for buy opportunities. If it's a bearish trend, you look for what? Sell opportunities. All right. Yeah, so that's that. Then that is what I mean by the trend is your friend until the end. Okay. So how do you trade with support and resistance? First of all, you follow the trend. All right. Number two, buy at support. Number three, sell at resistance. Okay. Number two is what you buy at support. Number three is what sell at resistance. Now, this is not always true. All right, not always true. Same thing applies here. Same thing applies here. Not always true. Okay, but this one right here, always true. All right. So follow the trend is always true. You buy at support, not always true. You sell at resistance, not always true. Why did I say that? Let's go back to my chart. Then you see why I said that. Uh, why did I say that? Now, okay, look at this now. When we are currently here, what happened? This was a resistance, all right? Okay, sorry, I did not tell you guys what support and resistance are. Okay, let me show you guys what I mean by support and resistance. All right. So, let me go back to my notes. Sorry for not telling you guys what that is. Now, what is support? Let me draw you guys back. What is support and what is resistance? Support, basically, support is like your floor. All right. Resistance is like your ceiling. All right. Support is like your floor. Resistance is like your ceiling. Now let's go back to my charts and I'll show you guys what I mean. So let me put these lines here. Let me put this line one and two. So here's the gist now, guys. Here's the gist. So if price moves now, all right, if this is a ball, all right, if this is a ball and it moves from here up to this point, all right, what happens? Your ceiling, this is your ceiling. Let me write that on it. Text ceiling and what floor. All right, support. So this is your ceiling, your resistance, and this is your floor support. So if this ball moves from this floor up to this ceiling, what happens? The ceiling prevents it from going up. Then what happens? It bounces back down. All right, bounces back down. Then the floor prevents it from going below this. What happens? It goes back up. All right. The ceiling also does the same thing, prevents it from falling, from going upwards, then it falls back down. So it continues this movement over and over and over again, continuously. All right, just like that, like that, like that. Okay, so this is perfect example for what we call you buy at support, you sell at what resistance. Buy means you want it to go up. Sell means you are saying it's going to do what? Come down. So you buy at support. Once the ball comes here, you say, okay, buy this ball so as to go up. If the ball reaches here, you do what? Sell the ball so it will come down. If the ball comes back here, you buy it again to go up. If it goes up here, you sell it at to do what? Come down. But now, what happens when this time around? Once when you buy, it now breaks this your ceiling. What happens when it breaks your ceiling? It has violated that rule of sell at resistance. Okay, and what happens when instead of it to reach here and bounce, it now breaks it and goes lower. It has violated that rule of what sell, so of what buy at support. So that's why I said that buy at support, sell at resistance is not always true, because sometimes price breaks support or breaks what resistance. So if you put your sell order here, you will be in loss. You put your buy order here, you'll be in what? Loss. All right. So that's what I mean by buy at support, sell at resistance. This is your resistance. This is your floor. This is the most basic form of uh, support and resistance annotation. All right. This is the most basic way that you can see it. The support acts as your floor to prevent price from going below. The resistance acts as your what ceiling to prevent price from do what breaking above. All right. So um, let me just show you guys brief example. Okay, let me play this line here. So now by zooming, let me zoom in right here. Now, what exactly is happening here? Okay, let me delete all these things. Annotation, delete all. Where am I drawing it? Alright, so what is happening here? Price did what? Went up. Let me draw it again. Price started from here. Alright, went up. What happened? It reacted and did what? Fell. Reacted and did what? Went up. Reacted and did what? Fell. Reacted and did what? Went up. Reacted and did what? Fell. What happened? Went up. What happened? It now fell. So those that placed buy orders here, what will happen to them? They will lose because after the reaction, price did what? Broke it. So price broke it. And that's why we cannot always buy at support or sell at resistance. Okay, so this is what we call your floor and your ceiling, support and resistance. All right, let me annotate this with text. Ceiling and over here floor. So this is your floor, which is your support. This is your ceiling, which is what your resistance. All right. So price moves from the floor to the ceiling, from ceiling back to the floor, from floor to ceiling, ceiling to floor, like that, until what happened? It reached the floor. Then, with a very huge force, it broke it and went down and went below. It broke the floor and went below it. All right. So this right here is the perfect example of support and resistance. Okay. So most times you buy at support, sell at resistance, buy, sell, buy. But if you place your buy here, you will most definitely lose this trade because what happened? It went in the opposite direction. So now, how do you know? Um, how do you know when to buy and when to sell? All right. So uh, when to buy and when to sell, you can get that from your candlestick patterns. Okay. Me personally, I am a support and resistance trader. So I use my support and resistance and I combine them with my candlesticks. All right. I use the candlestick Bible well. I know many patterns ranging from doji, hammer, hanging man, shooting star, evening star, falling three, rising three, dark forest, harami, gravestone, and the rest. I know many of them. All right. So when I see those patterns forming on my support or my resistance, it tell me, okay, you can buy or you can do what? Sell. All right. So I don't just buy and sell immediately when price reaches any support or resistance. I wait for a confirmation, and my confirmation is always my candlestick pattern. All right. Yeah. So other times I might use chart patterns too, like your bullish flag, bearish flag, M's, W's, head and shoulders, and the rest. I might use those ones to to depict when I'll enter or when I'll sell or when I'll buy the market. All right. Yeah. So let me clear all these things. Wow. Let me delete. 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 And last one. Delete. Okay. So that's that about support and resistance. All right. So you can do your basic chart up, your basic marking up using just purely support and resistance, and you see how it will favor you well. All right, it will favor you so well that you'll be like, wow, wow. You see me that I can do this stuff. So that's it. Let me clear out this place. Okay. So quickly I want you guys to, go to the chat box and any pair you want us to analyze, just to draw our support and resistance. Just just let me know. Just say it down in the chat. Which any pair you would like us to do our practicals on using support and resistance. GBP GBP Joe. Okay, you meant GBP JPY. This one asks, is what is Ichimoku cloud? Ichimoku is a form of indicator. Alright? Ichimoku. See it right here. If you don't know how to use Ichimoku cloud, don't even bother using it. Why? Because it's going to confuse you. You can see it. You can see it. So Ichimoku is a form of what? Is an indicator. So if you don't know how to use it, just don't bother using Ichimoku cloud. Alright? It's only expert like me. I can use it well. I can use it well, but I just decide not to use it. So the charts. Alright. So okay, we'll take them one after the other, please. GBP JPY. GBP JPY. Okay. GBP JPY. Oopsie, sorry. Let me go to my other charts. Let me use forex.com. That one should be clear. Oh, GBP JPY. Most of my charts are marked up already. Okay, this is a clear chart now. Alright, so if I was to mark up this chart now, here's what I'm going to do using my support and resistance. Alright, so first thing I'm seeing is okay. Let me zoom in a little bit. Let me zoom in. So what am I seeing? Look at this reaction. Look at this point. One, two, three. Okay, let me note it using that, please. Got one, two, three. Look at this one. This I know that in this week, 4, 5, 6, and what? 7. Alright. These are 7 areas now. What exactly will I do? I will go and pick my horizontal line and place right here. 1, 2, 3, 4, 5, 6, 7. You can see here too, 8 this week here. I don't know if it has been this week here. Alright. So yeah. So these places now, these are where these are no okay. Price has seriously reacted in this zone the past few, not just once, not just twice. So this area now, price okay, you can see price respects this area well. All right, you can see right here. So, but someone like me, I like using okay, let me see use it, sha. But I like using uh rectangles to denote my own support and resistance. I like using rectangles, all right, because I see support and resistance as an area where price react, as an area, all right. So look at it right here now. This is the area where price has reacted. So it doesn't mean that I can still put my line here, okay, so you can see it. So now price is at what this place now. Okay, when price was here, this acted as what? Your ceiling. It hit it, came down, hit it what? Came down. But it broke it, came down again, broke it again. As it broke your ceiling, what happened? it became what? Your floor. Let me go back to my notes. If price breaks your ceiling, it turns to a floor. All right. And if price breaks your floor, it turns to your what? It turns to a ceiling. So what exactly do I mean? I mean, if price breaks your ceiling, what is ceiling? Ceiling is what? Your resistance. It turns to what? A floor. Floor is what? Support. Alright? And if price breaks your floor, which is your support, it turns to what? That your support turns to what? A resistance. Alright? So you guys should get this straight, please, so that you won't be confused at any given point in time. If price breaks your ceiling, it turns to your floor, and if price breaks your floor, it turns to what? A ceiling, meaning turns to your resistance. All right. Let me share the screen back. So when when price was here, look at this now. Price came there, hit my floor, went up, came down, hit my floor, reacted, and what happened? It broke my floor. My floor turned to what? My ceiling. You see? Ceiling. Then what happened? It broke it again. It broke my ceiling. And what happened? It broke it again and became ceiling back. Then he hit it as a ceiling, ceiling, broke it again. Then what happened? Acted as a ceiling here again before it now broke it. Acted as a floor, went up, acted as a floor now. So now currently price is here. Price is currently at my floor. So I'm looking for buy opportunities or what? Sell opportunities. Okay? I'm looking for buy or sell opportunities. Alright? So here's what I'm going to do now. For me to mark up this chart, I've seen, okay, I've done my first level, which is this one. I'm seeing something else. I'll pick my trend line to look at this touch. One, two. Let me connect these two. What are you seeing? The price is what? At is both at my horizontal support and my what? Diagonal support. So price is currently at two of my supports. Alright? Price that is both at my horizontal support and my diagonal support. Okay? Yeah. So I'm expecting price to either from here to push up. I'm expecting a push up from here up to this point, or or a break from this place, from here down to somewhere here. All right? Yeah. So something like this, I just back up my chart. I do this, then I place this and this. Yeah. So you can see I do this right here. This same thing here. So you can see that price started the movement. I'm going to ignore this. So when it came, hit this point, came down here, went up, came down here, went up, came down here. So I'm expecting what? You can see that this is also a bullish channel. Look at it. from here to this point. Go down, right? It's a bullish channel. So in a bullish channel, I'm expecting what? Buy in the market. But I'm expecting what? Buy in the market. So price came down, went up, came down, went up, came down again. What am I expecting? A push up. All right. But because we cannot have full control over the market, you keep your eyes and ears open. All right. Be open to the market. Market might try to buy or sell any point in time. So what is going to happen? If market decides to buy, I will buy with it. If it decides to sell, I will do what? Sell with it, because market can sell from here. It can break here. Sorry, it can break here at any given point in time, or it can reject here and go back up at any given point in time. So I prefer to do what? Be open to the market. If market tells me to buy, then I buy. If it tells me to sell, then I'll do what? Sell. All right? Yeah. So that's that about that. So this is how you can basically mark up your charts. This is just support and resistance. Okay, well, look at this right here now. This candlestick now. I don't know if you guys can really see it, but look at this candlestick. All right, this candlestick now. This is my bearish. First of all, this is um, bearish engulfing. This is what I call bearish engulfing. Then this is um, hanging man that is forming on a support. So I'm expecting price to break this point. I'm expecting price to break this support and fall down. But peradventure price doesn't break here, I'll follow the buy. But if it breaks, I'm going to what? Follow the sell. Okay. So someone is asking, how do I know? Someone just asked me one question. Person asks, how will the market tell you or suggest to you to buy or sell? Good question. That's a very good question. All right. So I'm a support and resistance reader. What does that mean? Let me show you what that. Let me go back to my notepad. It means that I will buy at support. Look at this. I'm taking it back to this point here. This number 2 right here. All right. I'll buy and support if and only if price, if and only if a rejection candlestick appears on the support. All right. And I'll sell at resistance if and only if a rejection candlestick does not appear, so it's supposed to be forms on the resistance or at the resistance. All right. Let me change this to forms. All right. So that's the only moment I'm going to buy or sell. So if you read this through and through and through and through and through, that is when you know, okay, I might buy and sell from here. All right. Now there are different types of rejection candlestick formations. There are different types. There's bearish engulfing, bullish engulfing, evening star, morning star, shooting star. There are different types. Me, I like the doji. If I see um what do you call it, um a hammer plus a doji on the support, I'm definitely going to buy that market. If I see hanging man and doji at resistance, I'm definitely going to do what? Sell that market. All right. Yeah. So just go back and read your candlestick bible. That is very, 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 very helpful. That candlestick map is very, very helpful. All right. So, so something like this, you can see right here. This right here now is what we call hammer, and the hammer formed at this resistance. What happened after the hammer formed? It sold. You can see that, right? It did what? Sold. Then this is what? Bullish engulfing. This too is called bullish engulfing. What happened after the bullish engulfing? It did what? Bought. The market did what? Bought. Now look at this small look at this small thing here. Now, this is what we call hanging man or inverted hammer. It formed at this support this line here. What sorry at this resistance. What happened? It sold. Then look at this stuff right here. This is what we call hammer, hammer, hammer. Then we doji. What happened? It was bought. All right. So there are different types of um, uh, what is it called? There are different types of rejection candlesticks. All right. So you can just go back to your um, what is call it candlestick Bible. Then you will know all this. This is also part of rejection candlestick. What happened? It sold. So you can see that this is it is another candlestick rejection. What happened? It bought. So look at this right here. It also bought. So price react to all these things very well. And traders, most especially retail traders, they pay attention to all these candlestick patterns. All right. So by Monday, I'm going to be if price should break this level, form a retest, I'm going to do what? Sell. All right. But if price should give me, or if price should give me a rejection sign, maybe two candlesticks showing me rejection sign, I'm definitely going to do what? Sell. Maybe it gives me a bearish engulfing here, I'm going to do what? Sell this market. If price gives me bullish engulfing here, I'm going to do what? Buy. Or if price should form hammer here, I'm going to do what? Buy this market. All right. So that's that about support and resistance. That's how I confirm my entries for my own trading. Okay. Which other pair did someone mention? Someone mentioned the USDJPY. I don't really like that pair, but I'll open it. USDJPY. USDJPY. Okay. So what am I seeing in USDJPY? This is let me just show you what I'm seeing. Right now, I won't trade this market until I see something definitely going to happen. This is exactly what I'm seeing in the market. Something like this. Alright, so price will definitely continue. I'm seeing that price will continue. This is what we call a descending channel. Alright, this is a descending triangle. Sorry, descending triangle. A descending triangle. So I'm seeing that price will come here, bounce until it breaks out to the upside or to the downside. Alright, yeah. So basically, what am I just going to do about it? Let me zoom in. Let me zoom in. Then right here, look at this now. This is why I won't trade this market. Price is currently at that level. Let me show you guys something else. It's forming. So this is what is forming. This is what we call this is what we call a symmetrical triangle. Okay, a symmetrical triangle. What happens in a symmetrical triangle? Price goes up, comes down. In fact, in any triangle formation, price is going to break to either to the upside or to the downside. Alright, so I won't trade the market because it's currently at this. Look at this. Look at all these candlesticks. It's at this line here. It's price has been around this line for a very very long time. Just look at. So I won't trade this market. I won't just trade it. So I'll wait for price to break out from that triangle. Once it does, I'm going to sell either to my nearest, see my nearest support, or see my nearest support or resistance here. It's look at this right there. Look at this point. You can see one, two, three. You can see now. See this area too. Alright. So that's where if price should break below, I'm going to sell to this point. If price should break above, I'm going to buy all the way to this point. So this is the next. Look at all these reactions here. All these reactions here. Alright. If price should break below, I'm going to sell down to this point. I'm going to sell from here down to this point, or I'll buy from here up to this point. Alright, so I'm usually open-minded to the market. The market give me two directions, then I follow any of the directions. Market must buy or sell. Alright, so see what I mean by see another perfect X example. Look at this doji that formed on the resistance. What happened? It sold. It sold. Alright, then what happened? It bought from the rejection, sold. But so just like that, like that, like that. Alright. So that's how you can just do this markup, and you can start trading and making serious money. So the next one is NZD card. NZD card is the QE versus the okay the NZD card QE cable. So here's what I'm going to do. First of all, I'm going to identify my different areas of support and resistance. Look at this. Let me paste this line here. You can see all these reactions at this line. So this market is very very choppy market, but at least you can see what I'm trying to picture. Okay, let me delete that. Use rectangle instead. Alright, so market, this is what I call my support or resistance zone. Market is in the zone, like that, like that. It broke it, came again, broke it, came again, like that, like that, like that. It always forms all these stuffs. Okay, so now currently market is in this zone. Market is currently in this zone. What will I do? I'll wait for price. Tell me, and look at this stuff again. Look at here. So this, look at this now. So I'll wait for market for price to tell me, okay, you can buy or you can sell. All right, but I'll wait for price to break out from this point. Let me do it. I'll wait for price to break out from both this line, this diagonal line, and this zone. I'll wait for price to break out, retest, then continue buying. All right. I'll wait for a break retest, wait for a break, retest, and what? I continue buying. Okay. So, but if it should not obey that, if it should reject, I'll wait for price to. Once it rejects, comes out from this my zone, then I wait for a rejection, sorry, a retest, then I sell. Alright. So either it breaks, retest, then I buy, or it comes back here, breaks this zone entirely, retest the zone, then I do what? Sell. So either ways, I must make money from the market, and it takes patience. All right, it takes patience for you to make money in the forex market. You must be patient enough for you to make money in the forex market. Okay, let me delete everything now. So if you are being patient enough, you make serious money. Euro dollar. Let me look at the euro dollar. Now I've already done my markup here, so I'm going to delete that. Whoa, what broker is this? Okay, good. Alright, so price is currently ranging. Price is ranging. What is happening? Let me go to 4 hours chart so you see the picture clearly. What is happening there? Let me get this channel something out. Yeah, up to here. Yeah, this one. Right? Yeah, smooth. Okay, so my price is currently in this range now. So I'll wait for price to come to this point. I'll wait for price at this point or at this point. If price should come here, I'll wait for a break and retest for me to sell, or a rejection as at here for me to do what? Buy this market. Alright. This is, we just place this stuff right here. Place here, place here. Yeah, so basically the same thing. So I wait for price to come here. If price should come here and gives me a rejection sign, then I do what? Buy. Alright, so this is a hammer bullish engulfing. What happened? Both. Alright. So this is what we call tweezer bottoms, no, tweezer tops, then plus bearish engulfing. It did what? Sold. Alright. Bullish engulfing at support, it bought. See sweet rejections here, sold. Bearish engulfing here, what happened? Sold. Alright. So price always speaks to us. So it now depends on you. Do you want to listen? Okay. So in market you have to have patience. Price comes to this point, you wait for a reaction, either break and retest or rejection before you enter your buy or your what sell. The next pair we are going to look at is AUD card, the, the Aussie cable. Aussie cable, Aussie cable. Alright. Okay, so those of you asking your questions, I'm going to answer them after this class. After this whole, I'm going to answer them. So Right now, what I'm seeing the Aussie cable is this. Sorry, the Aussie Loonie. I actually forget. I actually take the cable for the Loonie. So I pick out my trend line, which is also my diagonal support and resistance. Draw this one, draw this two. Alright, so I'll wait for a price rejection. So right here now, let me go down to 1 hour so we'll see the movement better. This is a what bullish channel. Price came down here. What happened when it touched this point? It formed rejection candlestick and this was it, then it bought. Alright, it bought all the way up to this point. But it came here, formed doji, bought like that. Formed this is railroad tracks, sold. It formed some patterns here, bought like that. From here it sold, from here it bought, from here it sold. Now from here it bought now. So now price now is currently here now. I don't trade when market is in the middle. No. I trade when it reaches either the resistance or support. So I am a support or resistance trader. I'm an S and R trader. I trade only when price reaches here or here. Okay? When price reaches either my floor or my ceiling. Alright? So uh I'll wait for price to come here. If price should come here, and as usual, if it breaks and retest, I'll sell. Like if you do what? Break and retest, I'll do what? Sell. But if you should reject, I'll do what? Buy. Alright? So that's how I do my own trading. Okay? So either it breaks and retests, then I sell, or it rejects and I do what? Buy. I use candlesticks to give me further confirmation about my trades. Okay, let me delete all this now. So that about support and resistance. Someone asked, please, what is RSI? RSI is an indicator, alright? See it right there. Just go here, search for RSI. Just search RSI to come out. Relative strength index. See it here at the bottom here. You use it to, do your to confirm your entries. Also, you can also use it to confirm your entries. Okay, so I'll delete it. Let me delete it right now. What are indicators? Indicators, just like the name, they indicate, they tell you where price is going to. All right, that is what someone tell you, but that is wrong. Indicators tell you what price has done in the past. All right, they use previous price data to, and they plot it and they show you, okay, this is what happened in the past. So, and in forex, what happens in forex is we use past price action to depict future price happenings. All right, in forex we use previous price action to depict future price happenings. Okay, so indicators, they tell you what has happened in the past. They just give you what has happened in the past. Like for instance, now look at this RSI now. Let me delete this one. Look at this RSI now. It's showing me what has happened in the past. Abi? Yeah. And this same thing that she showed me here is what I'm seeing on my chart. So it showed me what has happened in the past. There are different indicators for different There are different indicators for different purposes. Okay, yeah. So that about indicators. So how will the market? Okay, I think I've answered that. What about waiting for retest? Yeah, I wait for a retest after a break of my floor or my ceiling. I wait for a retest before I enter buy or sell. That's be on the safe side. Okay, so I will know whether it just be a fake out or a true breakout. Fake out is also known as false breakout. And also, how can one set TP from there? How can one set TP from there? Okay, TP. Set your TP. Like now, if I'm to sell, if price gives me a rejection candlestick, okay, like here, right here now, or let me say right here. If after I've drawn, if after maybe I saw this happened, it went up, went up, came down here, 2, 3, went up, came down, 4, and I draw from here down to this point. I told myself, well, the moment price comes down here, I'm going to place what? A buy. Let me see if I can do that. A replay. Let me see if I can get a replay. Let me see if I can get a replay. Hold on. Uh, hold on. Okay. Let me use this as an example. Wait. Hold on. Okay, so I want to show you guys what I really mean. How you can set your TP and SL using just support and resistance. Okay. All right. So we have seen reaction one, reaction two, reaction three. All right. So let me do a replay now. How can I get this replay out? Wait, hold on. Let's check that. It can also help. Okay, so let's just go back there. They're not giving me the right. Okay, so basically, see, this is what I mean. If I get this right here now, if I've seen okay price, okay, let me now let's imagine this is what has been happening in the market. We saw all this reaction, we saw all these stuffs. Then currently price is at this point. I'll get my stuff here, my rectangle. I draw this zone. I draw this zone. All right. So I'm moving small, and I said, okay, let's if price should now let's imagine price has not gotten to this area yet. Okay, let's imagine price has not gotten to this area yet. I'll identify here first, then I'll identify this area second. This area above second. Let me get that right. So, but for example, now let's say price has been hit. It will from here it go up, hit here, go up, come bounce, come down here, go up, So anytime I see price come to this level, either it breaks or it doesn't, or it rejects. Abi, either price breaks something or it rejects it. All right. So price came here. What happened when price came here? It rejected. It rejected and did what went on. So gradually I'll be moving. Okay, price came down here. Price came here. It bounced off, went here, and that hit my resistance here, and then I was going. So the moment price came here, what happened? Same thing happened. So now currently I'm waiting for price. If price should come to this my zone again, what should I do? I'll wait for a reaction. If I see a rejection candlestick here, I'll set my buy. Place buy immediately, then I'll put my TP at my next S and R zone. Alright? And what happened when price bought from here? What happened? It started buying until it got to this zone. How many pips? That is 108 pips. Using a standard lot, that is $1,080. Using mini lot, that is $108. Using 0.01, that is $10. Cool $10 got it from the market by just waiting till price gets to your point before you now take profit. Then your stop loss will be just below this your, like this my zone. If I'm to place my stop loss, it will be somewhere around here. Somewhere around here. My take profit will be somewhere around here. Alright. So this is it. I'll pick out these two, place here, stop loss here, take profit where here. Alright. So basically this is not how I trade, but this is just like an example of how I can trade. Alright. I'm a swinger, so I don't take 100 pips in the market. I take nothing less than 200 pips. From 200 and above, then I'm good. Any trade that is below 100 pips, I hardly take it. So that is me for you. Yeah. Um, One asks, what time frame is available to use in doing the analysis as to where the market is heading? Okay, just calling tech. I think you want to be like me. For me to know where the market is headed, I use, first of all, I start my analysis from the monthly chart. I start from monthly down to my weekly. So weekly is telling me that it's a what? It's in a what? Um, bearish market. Look at it. This market is still a bearish market. See, this is still a bearish market. This is a bearish market. All right. So that's the thing that I'm seeing in your bearish market. Me, I'm a swinger, so I can wait for a very very long time. How many people from here? Let's guess. 300 pips. Okay. So, but if you want short trades, like if you want to trade just for yourself, you start from your daily. All right. If you want your trades to last maybe 1 day, 2 days, 3 days, not like 1 or 2 days, you start from daily. All right. Daily, I think that it's a bullish um it's a bullish market. One, your 4 hours is still showing you that bullish stuff. What will you do? You look for what? Buy entries. Okay. You look for buy entries at this bullish stage, at this bullish channel. This is a bullish market. Okay. But for big boys, the big traders, the big men, they are seeing a bearish trend. It's still a bearish market to them. It's not a bullish until it hits, until it shows them sweet price rejection. Then, like from here now, it became a bullish trend. From here, it became a bullish trend for them. But for here, it's still a bearish trend. All right. So that's how you can determine your time frame. You start from your, maybe you can start from daily or 4 hours. All right. But for scalpers, you can start from your 1 hour. from 1 hour, you see this channel, you say, this is a bullish channel. Okay, scalpers, you start from your 1 hour, this is a bullish channel. Then you go down to your 30 minutes, you look for buy entries here or sell entries here, or 15 minutes. All right, you look at this, you look, okay, once price breaks this level now, these are various opportunities in the market. If price should, break this level, I'm going to do what? Buy or sell. If price should break here, they will sell to this point. Scalpers will sell from here down to this point. Sell pips and they're out. Or they will buy from here up to this point. How many pips? That should be about 20 pips. And they're out of the market. They don't waste time in the market. Those are scalpers. If you're a scalper, you start from 1 hour to do your analysis, to determine your trend. But if you're a swinger, you start from weekly or daily to determine your trend. Alright. Intraday traders use daily, swingers use weekly. Position size, momentum or position traders dey use monthly, yearly, quarterly charts to do their analysis. Alright, so that's the various time frame that you can use for various traders. um yeah, the recorded video will be sent to you guys soon. Can this external work for scalper traders? Yeah, it can most definitely work. Please, as a beginner, okay, what am I expected to know before starting to trade? You have to know everything about market, everything about the market, candlestick, support and resistance. All right, just know these two first, then you advance. What swing trade? What is swing trade? Swing trading is, I said it in our last class. What is swing trade? Say swing trade is trade that can run for weeks or for like 1 or 2 months. Let me say 1 month. It can hold a swing trade for 2, 3, 4, 5 days to 2 weeks, 3 weeks, 1 month. Sometimes up to 8 weeks or 6 weeks. It's a long trade. All right. If you want to trade like me, which time frame do you use? If you want to trade like me, I start from my monthly to know the trend. Then I go to my weekly to look at the bigger picture. Then I start my analysis on my daily chart. From daily down to my 4 hours. Then on the 4 hours, I will be like, okay, I can buy or I can sell. All right. I use my 4 hours candlestick as my own entry. That is why I stop. I stop at 4 hours. All right. So that's that about that. Also, can someone with a $10 account use swing, scalp, day, or is there a minimum balance for each time of trade? Okay, to be on the safer side, if you want to swing, to be on the safer side, like if you want to swing, like you don't want to run any loss at all, like you want to be pampered. If you want to swing a trade, you need at least um $200 or $500. Use your 0.01. Alright, yeah. Then um if you want to scalp, you can scalp with $10 now. Find 10 pips or 20 pips and be just scalp at what we call hit and run. You can scalp from $10 to $50 in just one day. Just be scalping, take small pips and go. Alright. What's boom and crash? Boom and crash, okay, that is not in forex. That is that is an instrument in the derivative broker, formerly known as binary. Okay, that is boom and crash. Yeah, boom and crash, the boom index and crash index. It is not in forex. It's a synthetic index. Alright, any other question, guys? Okay, for those of you that might still not be clear, I've actually recorded videos. I've done videos on support and resistance. Just go to YouTube. Just go to YouTube. Let me sign in. Okay, you search for trade. Oh, what is this? I not that Jeremy Cash. This guy is really popular. Okay, I don't okay. So trade with John CEO. I've dropped some videos there already. I so this is my support and chance part one, part two. Let me copy the link. Let me copy the link. So you can also go there to get clearer this and this is part one. This is part one. Then let me get the part two for you guys. Let me get this one too. And these are the two links now that you can use. Alright? Those two links are I did the videos on YouTube. If they're on YouTube now, you can just go and watch. Then sometimes I just drop some videos there, show you guys how to do this and do that. Yeah. This is part one and this is part two. Okay. Copy. Then okay. So you can just watch them. You know how to trade. You know how to do more on support and resistance. Okay. After making the analysis, how do I know when to enter the market? It's from you can like me. I use candlestick pattern to enter my own trades. I use candlestick pattern. All right. I use candlestick pattern to enter my own buy or sell. That's what I use to my own trades. Okay. So any other question, guys? Any other question? Any other question? What pair for you advise? Please, can you repeat that? I don't really understand. Okay, what pair do you advise that you, do I advise that you start with? Or you can start with any pair of your choice. Any pair of your choice. You can start with major or the crosses or okay, don't enter the exotic set. Just do your the minor crosses or the major pairs. All right, that is the USD pairs, Euro pairs, card pairs, JPY pairs, pound pairs, and the rest. If I'm trading with a $10 account and I spot a trade that's selling or buying like 100 pips and I decide to go for that, it's everything. This is that I can't just say no with the $10 account. Okay, you can actually place a 100 pips trade on a $10 account. All right, using your 0.01. But I said that you should use you should have like $200 or $500 for a swing trade. Why I said that is because if you want to be on a safe side, like if you want, because when trading you must you have drawdown. You can never fully decide, okay, here's how the market is going to move. No, 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 no. Your own is just to do your analysis, and you hope that market follows your analysis. All right. So um what's it called? If you are doing, if you have a $10 account, and imagine you are experiencing a retracement close to, let me say, 120 pips, what will you do? Your account will be exhausted. It will finish. Your trade will be closed. All right. I've been in a trade where I experienced a retracement up to a drawdown up to 130 pips. All right. I was still holding on to the trade. All right. So assuming my account size was not large enough, if I was using a $10 account, the $10 would have finished, because $10 on a 0.01, that is 100 pips, right? So assuming I was using a $10 account, it would have finished. So I like swinging from at least $200. But if you have a $50, $20, you can swing with those trades. All right, you can swing using those account balances. Yeah. Any other question, guys? Any other question? I'm open for questions, so you guys should ask your questions. If no other question, I think we are about to end this meeting. All right. So, Shay, Tiffany, do you have anything to say? Okay. Okay. Someone is telling me how to move stop loss again. Okay. Um, to move your stop loss. All right. So imagine you enter this trade from here. Let's imagine you take this trade from this point. You enter the buy from this point, right? Your stop loss will be somewhere here. Somewhere here. Let me say here, right? This is where your stop loss is going to be. Somewhere here. Your entry will be here. Stop loss will be here. Alright? And if your take profit is, let me say, this zone here, right here. In this area is your take profit. That is, you are using this. You are using this. Let me break it down back. Sorry. So if this is your take profit, there is this green zone, and here's your stop loss, this red zone. Alright? So if if this is what you are using, maybe you enter from here. If price should move, maybe say, um let me say it moves like 180 pips, what will you do? To protect your profit, you now shift your stop loss to somewhere here. Wait. If your stop loss was here, once the trade has moved from here up to this point, maybe somewhere, okay. If trade moved from here, has moved from here up to this point, what will you do? You protect your profit. Take your stop loss from here up to this point. All right. You can take it maybe like 10 pips, 20, 30, 40, 50. If it moves from here to here, take it for you. You take it again from here to somewhere here. As it's moving, you are moving. So, per adventure, the market now decides to from here decides to reverse, it will go and hit your stop loss. And once it hits your stop loss, it will hit your stop loss in profit, not in loss anymore, because you are very by then you are very secured from here to here of profit. All right, so that's how you can shift your stop loss. We call it trailing stop loss. Okay, trailing SL. Yeah. Buy now, buy limit, buy stop. Buy now, buy limit, buy stop. Okay, let me explain that. Fortress, you are welcome. All right, so let me stop this share and share my notepad. There's something I will call what? Pending orders. What are pending orders? Pending orders. Example, buy limit, buy stop, sell limit, and what? Sell stop. Okay? So there are two ways in which you can enter the market. There are two ways in which you can place your trades. Sorry. So you can either place your trade using what we call market execution, or what we call instant execution. For iPhone, you will see instant. For market, you will see market. All right. Either you place your trade using market execution, or you place trades using what? Using what we call pending orders. And these are the four types of pending orders that we have. Four types: buy limit, buy stop, sell limit, sell stop. Now, let me just explain all these things to you. Stop share. Okay, okay. So, um, if I want to get to this market now, let me delete this too. If I want to enter this market, all right, I might say, okay, I want to place, okay, this is my zone right here now. You can see my zone here now. This is a zone right here. So if I want to place a sell here now, I might say, okay, I want to place a sell right now. I'm placing a sell right now. I'm using what we call market execution. That is instantly, right now, like now. I'm using what we call market execution. All right. But if I want to place a sell, this black line is called my sell order. Okay. Let me use as my market order. If I want to place a sell right now, that's from here. I'll use what we call market execution or instant execution. That is sell now. All right. But if I say um, this market, I want to sell it when it goes up. Market is still here, oh, all right. Market is still at this point, but I want to sell this market once it goes up to this point. I want to sell from here down. I want to sell it once it reaches here. I want to sell from here now down. All right. So instead of me to put my to sell market execution, I'll use what I call sell limit. All right. I'll use what I call sell limit. Now, what is sell limit? Let me now give you guys the GST. My notepad. What is sell limit? Sell limit is what? This is a market order. This is a market order that is given or that is used to enter a sell trade at a future market price higher than the current market price. Let me extend it. You guys see it clearly. All right. This is a market order that is used to enter a sell trade. Sell trade at the future market price, which is higher than the current market price. All right. Let's go over it again. Sell limit is what? Sell limit. This is a market order. The all these are what they are pen, they are all market orders, even to the market order. This is a market order that is used to enter a sell trade, to enter a sell at a future market price. At a future, not now, not present tense, future tense. At a future market price higher than the current market price. That is that market price that you want to enter your sell. It has to be higher than the one that where price is at the moment. All right. So if I want to, if na like that, price is currently here. Here is 0.96202. This is the current market price. All right. So if I want to enter this trade, if I want to enter this trade, maybe they say AUD card sell at, okay, let me give you guys an example. Text AUD card 0.96884. Now they say AUD card sell at 0.96884. Where is 96884? See it here, 96884. All right. But currently, where is the price? You first of all, once you see this kind of signal, you look at the price first. Where is the price? Is price at 96884? If price is not at 96884, you now check. Okay, price is where 96202. 96202. Wow. If price is 96202, and I'm telling you to sell at 96884. 96202, 96884. Which one is higher? 96884 is higher, right? And they're telling us to do what? Sell. But they're telling us to sell this market at a price higher than the current market price. And they're telling us that we should sell from this point. What are you going to do? You open your MT4, you go to trade, then from that market execution drop down, you select what? Sell limit. Because why? You are going to give the market an order. You are going to tell your broker, once price reaches this level, put me in a sell. All right. So nothing will happen until moment price touches this line here, this level. Then your sell will automatically activate, whether you are online or you are offline, whether you are sleeping or you are dead or you are anything, it will just definitely what? Activate and start to sell for you. All right. That is what we call sell limits. Okay. Now, if I say um okay, let me stop sharing. Okay, screen share notepad. Now what is sell stop? Sell stop, this is a market order that is used. Sell stop is the opposite of sell limit, all right? That is used to enter a sell trade at a future market price lower, you see the gist now, lower than the current market price. All right. Sell limit is when you are to enter at a higher price. When you are to enter sell at a higher price. Sell stop is when you are to enter sell at a what lower price. All right. So are you guys seeing my screen? If you are seeing my screen, please type one in the chat. If you are seeing my screen, please type one in the chat, please. Are you seeing my AUD card screen? AUD card. If you are seeing the AUD card screen, please type one in the chat. All right, good. Thank you. So, um, for example, we used when we wanted to enter sell at a price higher than this one. What happened? We use sell limit, right? Now, we want to enter sell at a price lower than this current market price. That is, if someone tells you enter, for example, now AED card sell at um, 0.9500. Sorry, AED card sell at 0.95000. All right. Sometimes you might see sell at, sometimes they might just put it sell stop. All right. If I'm sending a pending order, sorry, if I'm sending a pending order signal, I'll tell you sell limit, sell stop, buy limit, buy stop. But some people they will tell you sell at, give you the price. So if you see something like this now, you check where is the price currently? 96202. Where is 96202 and 9500? Which one is higher? 96202 is higher than 96202 is higher than 9500. So that means 9500 is actually lower. That means they're telling us to sell at a price lower than the current market price. All right. Now what will you do? You go and look for where 9500 is. 9500. See it right here. 9500. Let me change it. Coordinate 95. All right. 9500. Okay, this is 9500. So they are telling us that price is currently here, right? Since price is here, they want, if price should come to this point, then we should start doing what? Selling. We should start our what? Selling. All right. They want when price comes down here, we should enter our sell from here. All right. So at this point, you use what? Sell stop. This is where you use sell stop. But if it's at a price higher than the current price, you use sell limit. If you're at a price lower than current price, you use what? Sell stop. So with that being said, I need you guys to show me in the chat. I need someone to tell me what buy stop and buy limit is. Oh yeah, buy limit. Someone should say what buy limit is. Since you know what sell limit and sell stop is, to know that you are following, tell me what buy limit is. Buy limit. Fast in the chat. I need answers, guys. I need your answers. Know that you are following. Wow. There's nobody in this meeting. It's not the same as stop. There's nothing like stop limit. There's only buy limit, buy stop, sell limit, sell stop. Buy limit, buy stop, sell limit, sell. I've told you what sell limit and sell stop are. So now tell me what buy limit and buy stop are. I need buy limit first. Buy limit is just the opposite of sell limit. Just take away that sell. Just change that. Like when I say opposite, by opposite I mean change that sell to the opposite, change that higher to the lower. All right. Ismail, you got it. Yeah. No, Godman, that is not it. Godman, you got it wrong. You got it wrong. All right. Ismail, you got it. Buy limit is a market order used to buy at a price lower than the current market price. All right. Then buy stop is used to buy at a price higher than than the current market price. All right. Let me just type it here so you guys will see. So, what is buy limit? Buy limit, you just go over to sell limit and you do what? Copy everything about sell limit. Everything about sell limit. Everything. Control C, you copy and what you paste. But once you paste, this sell now, you change this sell to what? To buy. Change it to what? Buy. And you change the higher to what? Lower. Alright? Then for sell stop, sorry, not sell, for buy stop, you copy what is sell stop. You copy it, then you paste it. You change the sell to what? Buy. And you change the lower to what? Higher. Alright? That is as easy as it gets. Let me show you guys. Let me just illustrate. So, this market now, if I want to buy, right? They say AUD card AUD card buy at 0.950. What will happen? Sometimes they're telling me that once price gets here, they want us to place buy. All right. So what? I mean, once price gets here, they want us to place what? A buy. All right. They are saying once price gets to this point, we should place a buy. So this is a price lower than the current. This is the current price 96202. 9500 is lower than 96202. So what we do, and they're telling us to buy at a lower price. So you do what? Buy limit. But if they tell you buy at a higher price, you do what? Then once price gets here, you should continue buying. And they're telling you buy at a what? Higher price. They're telling you use your what? Buy stop. Alright, I hope that is clear. If that is clear, type 7 in the chat. 7. If it's clear to you, type 7 in the chat, please. Don't confuse yourself, please. Buy limit, buy stop, sell limit, sell stop. They are all pending orders. Alright. So, Innocent, you're asking what's the meaning of pips and spread. I did that in my last class. Please go and look for the video on pips and spread. Alright. Or you visit babypips.com. To learn more about um, the spread and the rest. All right. Okay, Timlen, you say I should please kindly repeat it. If you are giving an order that okay, buy if currently price is at 96202 and it told you buy AUD card at 96585, you check this is higher than this. They're telling you to do what? Buy. They're telling you to buy at a higher market price. What will you do? You use your what? Buy stop. Or yeah, they are telling you to buy at a lower price. You use your what? Buy limit. Okay. But if they're telling you to sell at a lower point, you use sell stop. Sell at a higher point, sell limit. All right. Chimene, is that clear? Buy limit to buy at the higher, at the lower price. You guys can copy all these things, jot all these things down so you won't forget to sell. All right, so that's that about that. Okay. Any other question, guys? You guys are welcome. You guys are welcome. All right. So our next class is going to be how to do simple analysis. All right. How to do simple analysis. All right. So this YouTube link I'm sending is for you to go back to YouTube, and I did two videos on support and resistance. All right. The first one, your types of the three types of support and resistance. There's your horizontal, there's diagonal, and there's dynamic. So you guys can just go over there and watch all those things. The next class, we are going to communicate it to you guys, all right? We don't want our classes to be clashing with Cosmax's own or the Epic Network's own, all right? So you guys should just be patient. Whenever we drop the link for the next class, just do it to join and invite everybody that's on your team, all right? So have an epic weekend, and I'll see you guys next week. Okay? You're welcome, man. All right. All right.